If you've invested in any investment vehicle before, or you're actively looking to invest, then listen up, because this video could potentially change the way you approach your investing. Before we get started, my name is Moyed Salabi and I've been in the Forex industry for 5 years, helping people get into the Forex investing space through Forex automation. We've helped over 500 people generate an extra 5 figures to 6 figures every single year. And the topic we're going to be speaking about today is how to approach your investment portfolio. So first and foremost, what is an investment? And for the people that don't understand what an investment is, it is putting either time or money, a resource essentially that you have, into something in the hopes that it's going to either generate appreciation or that it's going to generate cash flow. Now, I like to break investments down into 2 different types of investments. We have something that's called a wealth maintainer investment and something which I like to call a cash flow generator investment. And what is the difference between the two? Well, a wealth maintainer investment is where usually you'd put most of your money in. It's a very, very low risk investment, and it has the name wealth maintainer because it usually maintains your wealth. It's very, very low risk. You're not going to get a lot of returns. Whereas you have something that's called a cash flow generator investment, where you put money, it's going to be a little bit more high risk, but also the rewards is very, very high, meaning that it starts eventually generating cash flow for you. Now, before we go into that, there's another concept that we have to discuss called risk to reward. So risk to reward is essentially a way that investors calculate their potential risk to reward. It's a ratio. So let's say, for example, that you have a 5-to-1 risk to reward. This essentially means that for every risk, for every amount of risk that you put in, you have a potential reward of 5x that amount. And essentially, the bigger the ratio is, the better it is for you. And you want to try and keep your risk as small as possible and keep your reward as high as possible. But you also have to understand, since it is a ratio, that if you want to go very, very high reward, you will eventually also have to go high risk, vice versa. Now let's go back to wealth maintainer and cash flow generator investments. Let's give examples of that. For example, we have a wealth maintainer investment, which would be investing into real estate. I would break down the wealth maintainer investment and the cash flow generator investment into also 2 more categories, which is high risk wealth maintainer investment, and then you have a low risk wealth maintainer, and similarly with cash flow generator, you have high risk and you have low risk. I'll give you guys some examples just to understand this a little bit better. So for example, I invest into a property, and this property, I'm only looking to get capital appreciation. Basically, it's the most basic type of investment ever. Whatever you want to invest in, for example, you buy a luxury watch, right? I don't think it's the best investment, but some people do that. Or you buy a very, very rare supercar, or you buy gold, you invest into commodities, you invest into oil, whatever it is, and you buy it for the hope that essentially the value of it, the perceived value of it that society has placed on it, eventually increases, which you can eventually sell out of profit. So this is a wealth maintainer investment, because especially real estate, it's very, very low risk. So then what you have is you have a more higher risk type. So a high risk wealth maintainer investment could potentially also be stocks, right? So it's a little bit more high risk, but also because we have the high risk to reward ratio, you will also probably make more returns on a stock investment than you would on a lower risk investment such as real estate. Now, the main thing why we're discussing all this is because this is extremely important for correct portfolio diversification. We're going to speak about diversification in a second and what that truly is. Then we move on to cash flow generator investments. And the thing is, most people have wealth generator investments, right? Most people are investing into real estate. Most people are investing into stocks. Most people are investing into, all of these different commodities and assets, and they just kind of maintain your wealth, but you're not going to make any serious crazy money from it unless you have a massive amount of money up front. Then we move on to cash flow generator investments, and cash flow generator investments are a little bit different than just making cash flow like a business, because you have to input a lot of time. So the way I see it is, if I'm inputting a lot of time into something like into a business, etc., I wouldn't see it as an investment, right? That's more so like work. I wouldn't see it necessarily as an investment. Whereas you have, for example, let's give you an example of a low risk cash flow generator investment, which would be investing into a property but looking to yield rental income. So you're going to yield rental income. That is essentially passive way of making money, and it's cash flow being generated, but it is low risk. Then we take a look at higher risk, and the way we essentially invest in our higher risk. It's not necessarily that it has to be higher risk in general, it's just more higher risk and has much more higher risk to reward ratio in comparison to the lower risk cash flow generator, which is the rental income, and that would be Forex automation. Essentially using algorithmic systems that trade automatically for you in order to invest your money into and just make somewhat passive income. Now, there's no such thing as truly 100% passive income, but it is as passive as it can get, and that is once again done through algorithmic systems in the financial markets, specifically dealing with currencies or commodities such as gold, silver, etc. And this is a much more higher risk investment, for example, than rental income. But at the same time, when you increase your risk, when it comes to the risk to reward ratio, you're also going to get X multiples to reward as well. So it's going to be a lot more higher reward in that scenario as well. And the beautiful thing about this is that you can mitigate the risk in many different ways, right? You can mitigate risk in many different ways, in the way that you allocate your risk in the first place and in the way that you manage that portfolio. And if you have very good algorithmic systems, they can really minimize the risk in general. But that's something that for a completely totally different video. Now, why have we mentioned these 4 different risk or different types of investments? The reason being is most people have wealth maintainer investments, but very few people have cash flow generator, and even lower amounts of people have a higher risk cash flow generator. You need to diversify, and this is something that's extremely important in anything, right? In anything that you do, you need to diversify, because if you have all your eggs in one basket and that basket goes missing or something happens, or you know, the eagle comes in and he takes all your eggs, you're left with absolutely nothing. But at the same time, you can't just diversify into one type of investment or one basket of investments. Yes, you can potentially, invest in multiple different types of real estate, and then you can invest in, for example, gold, etc. These are all wealth maintainer but low risk. You need to diversify, and if you diversify in that way, you're able to have things that are very safe. They maintain your wealth, etc. They can battle inflation as well as that. And then you have things that are generating cash flow for you. And these things, for example, are the ones that you can, actually use on a day-to-day basis. So for example, I invest in real estate, and my real estate, yes, it makes rental income, etc. But it's very minuscule. I just keep it on the side. The capital appreciation as well, I can flip these properties if I wanted to. I did the 2x on a property there since 2020. And with that property, that's capital appreciation. It took a very long time, but I keep it there on the side. It's still there. Whereas with my Forex investment, for example, the algo investments, this is a much more higher risk. It generates me about 5 figures every single month. We're talking about $10,000 every single month, and it's done 90% passively. And the beautiful thing about this is the money that I can use on a day-to-day basis to pay my bills, to travel, to do whatever I like, to buy the discretionary things that I like to buy. And it allows me to then have my businesses, my other capital appreciation investments on the side that just constantly stack, and I don't have to tap into those. The beautiful thing about cash flow generator investments is that you can tap into that liquidity fast. Liquidity meaning that there's money available, there's cash available that you can just take out fast. For example, in your Forex investment, you can go in and you can take out your capital instantly, the same day you could withdraw your money, same day you could withdraw your capital. In comparison to trying to sell your gold, it's going to take a lot more time. Trying to sell your property, it's going to take a lot more time. Even the rate and how you make the profits, the cash flow generator Forex algo system, that can generate the profits on a daily basis. I can generate profits this morning and have it withdrawn by evening. Whereas even the lower risk rental cash flow, I only receive that once a month, right? And the ability to scale that is very difficult. For example, I can scale this and I can keep adding more and more capital, and it works on percentages. Whereas the cash flow generation from a lower risk investment like rental income is not scalable, because the only way to scale is just buy more and more property. And realistically, when you take a look at the risk to reward and the percentage that you're generating, you're going to need so much more capital here, like 10x the amount of capital here to make the same amount than here. But of course, this one is more safer than this one. Right. So this is just a little explanation of the different types of investments, and this is something to consider, making sure that you diversify. Now, if you are interested and you haven't actually heard about Forex automation and you're interested in diversifying your portfolio a little bit more, and you'd like to understand a little bit more about our system, simply go down to the description, click the link to apply, and if you apply and you get accepted, then you can hop on a call with our team just to give you a little bit more of a brief and a guide and explanation of what we do here at Quant Trading Society. With that being said, I appreciate you for watching the video all the way through to the end. Make sure to click the like button, subscribe for more of these informational videos, and let me know, guys, down in the comments below what type of educational videos you'd like to see. Take care.